The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 11th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start off our day with maybe with an empowering thought here. You know, most of us, not maybe, definitely an empowering thought, most of us underestimate the giant capacity that we can immediately command when we focused all of our resources on mastering any one single area of your lives. If you're anything like me, you know this to be true, because at several points in your life, you've committed all your energy to at least one thing out there. The problem, though, with mastering only one area of your life is that things can get a little out of balance. If you want to see how balanced or how out of balance your life can be, or maybe you want to see just how balanced your life is, take out a piece of paper right now. I know you've got a piece of paper, or if you're driving, you're listening to us in your car because you're listening on TFNN.mobi, maybe a radio station out there. I don't want you to pull out a piece of paper. I want you to just create the mental image. And that mental image is, I want you to create a circle. So on a piece of paper, you know, if you are sitting at a desk, you're sitting somewhere watching us on Tiger TV, just simply draw a circle there. And what I want you to do is I want you to go ahead and take that circle and cut it into four. You know, draw a line right, you know, down the center, both sides, if you will. So you create four, like you're creating four big pieces of pizza out there. And you're going to be able to have a chance to see just how balanced your life is, or not. Maybe it's out of balance. And so one of the slices that we're going to take a look at here, one of the slices is the slice of finance. So basically, I'm going to break your life into four different areas. Yes, I know it's more than just four, but we'll just start off with the simple things. The four areas: finance, another is health out there. We cover finance and health here at TFNN. You know, Friday, tomorrow, it's all about Nico and Paige as we take a look at health during the 12 o'clock session. So finance, health. Relationships would be a slice out there, and then you've got your career. So those four different slices, you could go ahead and, you know, write them in each of those different quadrants. Now, what I want you to picture is, on a scale of 1 to 10, where are you right now, let's say, in your finances, with 1 being, you know, 0 being not good and 10 being great out there. And what you want to do is take that first slice, doesn't matter which slice it is, that, you know, wherever your eyes visually go, and just kind of figure that slice maybe has 10 little quadrants in it. And just draw a line from one slice to the next of where you might be. So if you're at a 10, it's right at the top. If you're at a 5, it's right in the center. Now, where are you in your area of health out there on a scale of 0 to 10? Just whatever first comes to mind. There's no right or wrong answer, but 0 to 10, where are you? So draw that in the next quadrant. How about when it comes to relationships? Where are you out there, 0 to 10? And then finally, career, whatever it is that you're trying to master out there that you do. Where are you there? Now, if your picture is even, maybe it's all 5s, all 6s, all 7s, and you picture yourself as that being the tires of your car, you would ride pretty smoothly. However, maybe in one area of your life you're at like a 9, another area you're at a 2, another area you're at a 5. That would be quite a bumpy ride out there. So question is, how smooth is your car ride? You see, the key is to have balance. And you want to make sure that you have balance. Maybe you've got more than 4 quadrants in your life. Go ahead and take that circle, draw them into all of those quadrants, understand where you're at. That's going to help you determine where it is that you should be spending your time, because you want to bring those things into balance. Maybe you need to let a little air out of one tire and put more air into our quadrant, I should say, and put more air into another area. You see, once you've mastered time, and that's all that it is, once you've mastered time, you'll understand how true it is that most people overestimate what they can accomplish in a year. And most folks will also underestimate what it is that they can achieve in a decade. All you want to do is make sure the quadrants of your life are balanced out there, master your time, and you know what, folks? You will master your life. It is Masters Weekend, one of my favorite weekends when it comes to golf out here. Of course, let's go try to master these markets. Right now, we've got the Dow trading up 31 points. Composite just turned green, up 70 cents right now. The S&P up 3, Russell 2000 up about 2 points. Google trading off 3, Apple down $3, Microsoft up $1.30, Intel off 53 cents out here. Moving to the upside, you've got Priceline up $10.66, LinkedIn up $5.36. That's up 3%. Netflix up $5. Onyx Pharmaceuticals, ONYX, having a nice trading session, up 3.9%, 369. Ross Stores up 6%. Regeneron Pharmaceuticals up 360. Acadia Pharmaceuticals up 351. Sounds to me like the pharmaceuticals are on the move out here. To the downside, you've got Fortinet. Fortinet is really struggling, off 18%, down about $4 right now. Integra Life Science, IART, the art of life, down about 8.5%. That's off $3. Google down $3.50. Apple off $3.60. Chicago Bridge off $2.77. That's off about 4.5%. Chipotle Mexican Grill off $2. Our call-in number 877-927-6648. Let's start off by taking a look at the S&P 500. Yesterday, after a period of over a month, just over a month, because it was March 8th, that the S&P broke into the swing point from October 11, 2007, so was building cause for a full month and finally broke through. Didn't just take a look at, it took a look at 1576.09 and said, see ya. Don't want to be you. It cleared that, catapulted over that by closing out the trading session yesterday at 1587.73. So it broke it with conviction, not conviction from a volume standpoint, but absolutely conviction from a candle standpoint. That candle that you're looking at here, where you open at the bottom and almost close at the highs out here. In fact, the high was 1589. It closed at 1587. That is really as close to a type 1 power candle, type 1 in this case here, being as strong as you can get in the marketplace. So that's important when you are clearing an area. When you're clearing, when you're not in just the, let's say, the middle of a move. Well, let's put it more in the terms of when you're coming into a swing point, when you're coming into a retracement level, maybe it's an A to B equals CD pattern, whatever it is, the importance of the candle as you are forming that final pattern is really important to be paying attention to. And this case here, we know it was 1576.09. Look, let's face it, if it was doing it with just a small-bodied candle, there would be no conviction whatsoever behind that move. That is not what you have out here. We had yesterday. You can see that when you have wide-bodied candles out there, what's important to note, even if the market rests, the market does not end on a wide-bodied candle. Very rarely do you see that in a marketplace out here. And in this case here, you've got a little bit of a move higher. The S&P is up about $3 right now. We'll see where this thing wants to move up to. It looks to me like it wants to at least move to 1,600 before it gives us that round number area, 1,600, before it gives us any kind of indication if it wants to chug to the 1,650 right away or whether it wants to go ahead and pull back. Now, if we take a look at wide-ranging bar candles out here, markets do typically not end on those. You can take a look at the session here on the S&P 500. If you're watching us on Tiger TV, certainly go back to January 2nd out there, wide-ranging bar, and it was made a 100% move of a move. If you take a look back into the September 14th level, that's what was going on at that same time. You had some small-bodied candles and then move, and then it powers forward. Take a look at the wide-ranging bar here at the bottom, November 7th. Now that was not really a type 1. It was very close to yesterday's candle, to the other, the reverse of yesterday's candle, I should say. But the market on wide-ranging bars typically does not end there, and that's important to be able to note. Yes, volume-wise, it was off by, I don't remember what the number was, 40% or so, or 60%, some large number, versus the October 11, 2007 swing point. And volume is important. Right now, the most bullish thing that you could that would occur, doesn't mean it occurs today, is it come as a test of 1576.09. So there's that number again that you probably got tired of me hearing say. The most bullish thing would be coming back at some point here, testing 1576.09 and rejecting that area, meaning it's not going to get back in the lower part of its range, and that would be quite a breakout indeed. So 1576.09, still, you can't just throw that piece of paper away. You can't throw that out of your mind here. That's an important number. Not saying it's going to come come back there, but it would be the most bullish thing, believe it or not, would be come back, test that, reject that, and say, now I am off to the races. So that is on the S&P 500. It, on the daily chart, is not, in my opinion, is not overbought at this stage. That's on the daily chart, though. Let's go take a look at some of the other indexes out here. The New York Stock Exchange, I covered this earlier. The most bearish candle formation that I could find in the market yesterday was in the New York Stock Exchange. It's got this 3 drive to a pattern. Let's go ahead and actually just go fill that in a bit more out here, and really doing it off by 1 day, which is very nice. Boy, that didn't work, did it? Let me do this here. So one we're going to take a look at here, and this is a nice way that you can actually, maybe you don't have that same tool that I do to draw your patterns, but what you want to do is you want to take a look at expansions of swing points. What you'll notice here is that if you take a look at the first drive that I'm taking a look at is the high of February 19th. So you're going to go from that high, which is 9,004, all the way down to the low of 8,700.73 from February 26th. What you'll see is a 1.272 expansion of that is 9,087. Well, your first drive out here really comes in on the session. I guess mine picked it up right here, that session of March the 14th. And that got up to a high of 91.28 versus 9.087. That was a little bit over 1.272 expansion, about 1.414. Market pulls back, makes its next drive, which is right now it's doing here today. Yesterday got up to 90. The 1.618 is 91.92. The actual high from yesterday, 91.94. That really completes your 3 drive to a top pattern out there, just simply by taking a look at. Now, most systems have the ability to take a look at expansions of swing points, and you usually have an ability to measure time. And so here, without actually having that tool that colors it in very nicely, that creates that 3 drive, here are the tools that you can use on your charting software in order to be able to determine that. So you want to be able to take a look at nice Fibonacci numbers that whether it's 1.272, 1.618 out there, and that's what it is that we've got going from the swing point high from February 19th, again out at 9,004, all the way up to this swing point on March the 14th at 91.28, and then yesterday we're going to call it today because it's still within inside that range. The high right now has been today intra-session 92.22. Excuse me, you can see 91.92. Was the actual 0.618. And then just simply measure time. Whether you have a tool like this or you just simply can do a count, you can manually count the bars, and you can see you're not forcing any pattern out here. Now, why is that so important? Well, because when you take a look at, and we can go do that, take a look at the composite, take a look at the S&P now, the Dow, the Russell 2000, all of those over the 2007 highs, and that's important to be paying attention to. Now what you're taking a look at, hey, the New York Stock Exchange hasn't done that. It's just slightly above the 0.786 retracement level, but what it's done in getting to that retracement level has also formed this 3 drive to a top pattern. What's important about that? Because if this doesn't reverse when 3 drives to a top patterns fail, it also tells you very strong continuation pattern that would be in play here. And we've had some breakouts, so it's important to be paying, in my opinion, it's important to be paying attention to the next moves here inside the New York Stock Exchange. 877-927-6648. Dow's up 22 points right now. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 33 points right now. S&P up 3.5. And let's continue taking a look at the indexes out here. What we've got up on the charts right now is the NDX 100. The NDX 100, take a look at that candle session from yesterday. That is, there's nothing bearish about that candle signal for sure. We know the NDX has been in this holding pattern, this 0.786 Gartley sell pattern here for quite some time. I really completed that pattern back on March the 5th, so inside that holding pattern for a period of an entire month out there, so really building some cause. Now what happened yesterday, you break out of that area, you break the 0.786 Gartley sell pattern. As I have mentioned in the past, oftentimes when you break a 0.786 Gartley sell pattern, this is a doozy because this one was tested for over a month out here, from March 5th through yesterday, April the 10th out there. And when you break a 0.786 Gartley sell pattern, or Gartley buy, in this case here was a Gartley sell pattern, oftentimes they turn into butterfly patterns. Now, what is the work left ahead here for the NDX 100? Well, the NDX 100 made a swing point high on September 21st. That low was 28.59.55. Yesterday's close was 28.59.21. How about that? Misses it by, as far as the close, misses it by just a little bit. It actually got up into that level, closed just below it. The key now to be watching is 28.59.55. You get a close inside that, clearly what the NDX will do is go up to 28.78.38. That's the top of that September 21st candle. Then it will make that 100% move of a move out there. On a daily chart, it is not in the overbought condition, so it certainly has room to run there. It doesn't need to recharge its batteries even after yesterday's move on the daily chart. Where would a 1.272 butterfly take you to? That's a great question. Questions control your focus. That's important. That would be 29.82 out there. That would turn into the butterfly. That would be the 1.272 butterfly pattern. But right now, it's trying to get through this. It's still an open window, so it's still a window that has not been repaired, because what the NDX did was on September 24th, so we're going from September 21st to the 24th, coming back from the weekend, what occurred was you saw a gap down. So that gap down is still in play. Yesterday was a test, but closed back below it. Now, if you get 3 tests, which we've really had, yesterday was the second test, I'll say, because your first test out here happened to be on September 25th, as it made a high of 28.58.68. So to me, that's your first test. Of course, that goes all the way back into September 2012. Yesterday was test number 2. You like to have at least 3 tests of an area out here. But with that power of the candle from yesterday, with knowing that if you just take a look at the candle formations, wide-ranging bars, markets do not end on wide-ranging bars in either direction out here. In the case of the NDX, if you take a look at wide-ranging bars, I'll go ahead and I'll just go ahead and leave that. Let me remove a couple of things out here, make it a little bit clearer for us to take a look at. I don't necessarily have to have everything, and I can always add things back. So let me do that. Let me get rid of the Fibonacci numbers. Let's get rid of the what else? The exponential moving average. Let's delete all that. There we go. It's a little bit cleaner. You can take a look at this wide-ranging bar down to the downside over here back in October of 2012. Market didn't end on that. In this case here, you had a wide-ranging bar moving down. This was back in February 25th, but, of course, that was coming back into this strong little gap-up area. Now, this was a real wide-ranging bar. You had 2 of them in a row here, December 31st. Oftentimes, people will take a look at gaps, and they won't let their imagination take over, and that's the most important thing. That's the only nation that you can control, That's called your imagination. And what you want to be able to do when you take a look at gaps is, in your mind, you want to be able to fill those in. And all that you have to do is start with the gap from the prior session. In this case here, you would start with January 2nd, and you would fill that in all the way up to, the entire candle from January 2nd. So take a look at those 2 wide-ranging bars out there. It's no wonder the market actually has done what it's done. It was sending us that message out there. Take a look at any other wide-ranging bars. Markets do not end on wide-ranging bars out there. So, didn't have the volume necessarily, but volume, I won't say volume, schmolium, but what we do have is we do have a break of that 0.786 Gartley sell pattern. Now all it is doing, it's just gaining some strength, in my opinion, to try to take out that 28.78 level. That is from the September 21st swing point high out there. Let's go take a look at the Russell 2000. That has been a little bit weak out here. We'll see if that is going to start to play catch-up on the Russell 2000 index. We know that on the futures contract, it was giving you really the better signals out here because it had a hammer candle out here. Nonetheless, right now what the Russell 2000 has done, it's up above that 0.786 retracement level. I can get rid of that selling range out there because that is not in play. We come back. We'll go back. We'll take a look at the Russell 2000. Then we'll go take a peek in on the ETFs out there, the IWM, the SPYs. Maybe take a look at a couple of charts as well. Take a look at some of these stocks popping and dropping. Right now, the Dow's up 42. S&P is up 4. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 41 points. S&P is up 4 right now, trading out at 1592. We're going back to the Russell 2000 here quickly. Then we'll go out to Mark in Concord, Mass, and take a look at the NASDAQ with him. As we take a look at the Russell 2000, you can see yesterday wide-ranging bar getting above the .786 retracement level. That's a .786 retracement level off of its last swing point high, which was March 28th. You could use March 28th, or you could use the high from March 15th out there in that 954 range. Either way, the Russell 2000 breaking through that, now going to at least power up and try to take out the resistance level of 954 out there. I was talking about wide-ranging bars. Markets do not end on wide-ranging bars out here, nor did it on the downside on April the 3rd. You did get a lower move coming into Jobs Friday. Of course, it was really taking a look at the futures chart out here on the daily basis that it formed that bullish candle, big bullish candle, that hammer candle, followed up by a bullish engulfing session on April the 8th out there. Now it's going to make its runs here for the highs out there. On the daily, on the intraday chart here, if we take a look at the Russell 2000 futures contract, what we can see here is that yesterday it did form that .786 Gartley sell pattern right at the 942 level. That 942 level was coming off of the swing point high from 10:30 in the morning on March the 25th out there. That was at 951.30 all the way down to the low that was put in at 9 in the morning on April the 5th. and now you're above that 0.786. It kind of hung out there throughout most of the evening, came back and tested it, quite frankly, as we came into the 10 o'clock session, and now looks, and you can see it worked off all that it was doing here overnight. If you take a look as that 0.786 Gartley pattern was forming here, or had formed, you can see the market was really in the overbought territory. This is looking at the EKG on the intraday chart here, and all that it did was it worked that condition off, and it did that by moving down just a bit, coming back and testing that 0.786 level, and now it is done that, and it has the freedom to run to 951.30. That's the next stop inside the Russell 2000 futures contract. Let's go out to Mark in Concord, Massachusetts. Mark, thanks for calling. Thanks for holding. How are you this morning?
What? How are you, Steve? It's raining here.
Well, and what's the forecast? Is it rain all weekend or just for the day?
I think it's drizzle for today, heavy showers tomorrow. So.
Well, that's okay.
Man that lifeboat. Man that lifeboat, I guess.
Man that lifeboat. All right. You want to take a look at the composite?
I had a question for you. You had said earlier in your show, I did not catch your 9 o'clock show. You had said earlier in this show that you had talked about a 100% move of a move. Now, my question for you is, Steve, so I understand the terminology correctly.
Yeah.
The move on the NASDAQ yesterday, I think, was 55 points up. So if that's a 100% move of a move, does that mean another 55 points?
Now, let's see here, boy. I'm not on the NASDAQ. I didn't cover it with regard to it making a move. Now, are you talking about the NDX 100?
Or maybe it was the
NDX 100. Okay, all right.
But I'm following more the NASDAQ composite as opposed to the 100. So why don't we look at the composite?
Okay, because the NDX 100 is what. The NDX 100 is where I would have said the move of a move, because that's really its next stop. I do believe what we'll see out here, if it can break through that resistance level that was formed on the gap down on September 24th, and that all it needs to do is close inside 28.59. That's its next target. If it can do that, then it will complete that 100% move of a move, just move a bit higher before it goes and forms a butterfly pattern out here. But now go back to the composite, which is a good one to take a look at. So on the composite, go ahead.
Okay, so yesterday the composite went up 55 points.
Okay.
So I guess my confusion, Steve, and I should know this from listening to you and Tommy for so long, is define for me what you mean by a 100% move of a move.
It's really
that implies to me that you're basically saying 100% of 55 is 55. So basically, you're saying double it. That's the way I understand your terminology.
So it's a great question, and thanks for taking the time to actually ask. So I'm going to go back and so since we're going to take a look at the NASDAQ out here, in typical behavior, I don't know the reason why it works like this. I don't know whether it's because of all of the different people that are using technical tools. But when we're referring to a 100% move of a move, I'm going to come back. If you're watching on Tiger TV, just for right now, we're taking a look at the NASDAQ composite. I'm coming back to May 2nd, 2011. So May 2nd, 2011, sell in May. I mean, it was right on cue. It was the first trading session in May out here. The composite was up, Mark, at a level of 28.8775. It goes ahead, it makes an A to B equals CD down, and as it was making its move down here, back in the time frame of June 16th, what I want you to pay attention to is the left-hand side of a chart. Not only was it making an A to B equals CD down pattern, it was also making a 100% move of a move. What I'm referring to is the swing point down on the left-hand side of the chart. In this case here, it was March 16th. That low was 2603.50. The NASDAQ actually got down to a low of 25.9986, closed at 26.23. That is what's referred to as a 100% move of a move. When you are taking a look at any stock chart, when you're taking a look at something that might be breaking out or breaking down, your eyes first want to go to the next swing point that you see out there, because that should be your target. When you enter a trade, whether you're going long or short, one of the first areas that you should be targeting for where price will move to is that next major swing point. And that's where, that's in essence, now, there's other ways to come up with target ranges, which might be an A to B equals CD pattern, but when a move starts, you don't know where the B to C leg is going to come into. Does that make a little sense?
I think so, Steve. Let me.
Now, are you watching on Tiger TV? Are you watching on Tiger TV?
But I am. But you have to remember that there's a delay from when I hear you on the phone to what I see on Tiger TV.
Okay, so take a look at May 2nd, 2011 again. So May 2nd, 2011, where the swing point highs.
And I see that.
Okay. Now, when the market moved off of the lows in June of 2011, all the way down here, where it moved up to was it made another 100% move. It came all the way back to that swing point high in May of 2011. So when it was moving all the way up here in July, and when a market does that, it's kind of like a relay race. It finally gets back to the finish line. And when you get like it's running a marathon, and if you watch a marathon runner, the best analogy would be, they cross that line, they work real hard to get there, and then oftentimes the marathon runners, they just simply fall flat. They do something different. They try to recharge. And that's all that a market typically does as well. When it doesn't make a 100% move of a move, meaning it goes beyond that, that's when you start taking a look at Fibonacci expansion numbers. It's the best way to mathematically try to calculate where a market might run to. So that's what we're referring to when we talk about a market making a 100% move of a move. And I think just visualize it being a relay race. Just visualize it being a runner that was in or maybe not a relay race, just a marathon. Picture what you would look like in a marathon. Does that help?
I think so. But what I want to do is now go back and watch this on Tiger TV and stop and rewind. So that's how I'm going to digest what you just said. So I thank you very much for the explanation.
Hey, no problem. My pleasure. Anything we can do to help you out.
I have one other question. So it's basically a move from date X to date Y.
Yeah, and what you really want to do is try to pick out your major swing points. There's always swing points within swing points. On the composite itself, your swing point that you would first look at maybe on a chart here where it started the 3 drive to a top pattern was March 27th of 2012. And then your next major swing point, was down here at June the 4th. So you're looking really for major swing points out here, but you can see it happen on the minor swing points all the time, too.
Okay, so when you say a 100% move of a move, you have to realize what dates you're speaking of, from date X to date Y. So you have to say I'll take two dates at random, July 1st, 2000 to July 10th, 2001, and I'm picking those dates at random. Right, and you would have to look at those move of a 100% move of a move in that context. So when you say 100% move of a move, you have to qualify that with the date.
Yeah, absolutely, and thank you for pointing that out because
thank you, Steve.
Yeah, and thank you because what you're going to do is you just improve my communication skills on the radio. Because maybe I don't give out those dates, so I'll start doing that. That way it makes it even more clear for everybody out there. So thank you, Mark, for teaching me something.
Okay, well, you're welcome, Steve. And then a slightly different subject. I know some new listeners to TFNN.com or TFNN period, and they were asking me, and I try and tell them that this is more of a show for traders as opposed to investors. And they were asking me, okay, so they are confused about the long-term, and they don't understand technical stuff, and some of them are new, and they haven't listened to you very long, or Tommy, and they have not read Tom's book. So bear that in mind. So with that understanding, they said to me, okay, so do these guys meaning Tom and you and then the rest of the group, do they think that the market's going to go up or down? And we had this discussion last night. And I was trying to say, well, you have to really understand the chart patterns and all this kind of stuff. And they'd say that that's over their head. The one of them used, I don't have the MIT math or the MIT degree in physics to understand a lot of this stuff. I'm more of an investor. I'm a blue collar person, and I don't have time to listen to this stuff. So they were looking to me and saying, where would they want to do an investor? They've heard Tom say in the past the 825, and some of them have been scared to get into the market because of that, and they have money on the sidelines of that. And then they said to me, well, your guy O'Brien is saying that this 825, but then we have a rally of yesterday, and I get chewed out, and I try and come to the defense of all you guys, and I say, you have to listen to the context of the show every day, go back to the archives and listen to what they're saying. And in defense of them, they don't have time for that because of family and whatever. So I guess what I'm saying to you is, how do you foresee the market going? And I want them to go back into the archives and listen to your explanation.
Hey, absolutely. Okay, so great question. So thanks for asking that question. And, when we're doing this show here, I am always looking at some shorter-term charts out here, because the same patterns that work on a shorter-term chart work on a longer-term chart. And so from somebody, so we do cover, and all somebody has to do is really call in and ask the question. So you've done it on behalf of your friends, so thank you for doing that. And so from an investor standpoint, it'd be looking for a longer-term aspect. I've actually even done some special reports out there for people, what they should be paying attention to with regard to their 401k money. And remember, I did that one special report on just simply using the simple 50 and 200-day exponential moving averages out there and taking a look at the Dow. And so there was a whole study out there. You might have that, Mark, and I would share that with them, because that's one of the easiest ways for them to be able to, because that's a tool that becomes pretty simple to use. Now, it's a very lagging indicator out there, but it's a great one. But let's start with the question that you've just asked, because of yesterday's move, in where we totally made 100% move of a move. And what I mean is, going back to October of 2007, the highs on the monthly chart, that's what I've got on my screen here right now, was 1576.09. And we got up over it. This is the first time that we are up over it. Now, you could say that, quite frankly, the candle from last month was 100% move of a move, because it got inside that swing point. That swing point low was 1489.56. And so I'm going to draw a little line across the screen out here on the monthly chart. I'm going to put that in black, because the way that I look at it, 100% move of a move does not mean that you have to hit the exact high. As once you get inside that swing point, in this case here on the monthly chart, excuse me, I had to grab some water there. I got a piece of dirt or dust. So once the S&P got into 1489.56, which it did here back in January of 2013, that qualified for me as a move of a move. Now, what it has actually done here right now with yesterday's price action, it got above 1576.09. This has been in a consolidation, so that's 100% move of a move going all the way back to October of 2007. When you pull this chart back even further and you go take a look at the highs from March of 2000, you can see that March of 2000, that high of 1552 versus the high that we just saw, we saw in 2007 versus the high that we just saw yesterday, you can see a triple top. Now, you can also say, is this has been a consolidation pattern? In any consolidation pattern, whether we're looking at intraday or what have you, once a consolidation pattern is broken, that says you're going to go to the next level. You're going to, the price move over a long period of time is going to be that same consolidation area. It works the same on an intraday chart, whether it's a 10-minute, a 30-minute, or a monthly chart. So if, in fact, the S&P stays up above the 1579 level, what you're taking a look at is you're taking a look at a 750-point consolidation move, just like we were taking a look at gold. So as long as the S&P stays above 1579, doesn't pull back inside there, Mark, you're looking long-term funds of another 750-point move. What time that takes, I don't know. Remember, it took from March of 09 all the way to today in order to be able to make that back. So I don't know the time frame, but it would be the time to be long and strong inside your long-term funds out there. I hope that helps you out.
Well, I'll pass this on to my friend, so I'll probably call you back tomorrow or the next day with some more questions.
Absolutely.
Thank you, Steve. You have a great day.
Thank you. You too. 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on bond trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And, I want to thank Mark for calling and asking those questions because I do this show because I love to do it. But the reality is this show is your show out there. So it takes callers like Mark to call in to ask questions because the only way that I can actually get better, and I strive to be better each day, as I'm sure that each of you do out there, we're always on that same quest. And the only way to do that is to work with each other. I know during this week I talked about one of my belief systems. The more that you pour out, and you should pour out everything that you can, the more that will pour back into you. And there is nothing better. So I love doing the show because of being able to give. It's not what it is that I receive. It's really being able to give. So this is not my show. I just do this for 2 hours, and it's really all about you. So I'm going to find a way. I don't know if I'll change the format here by tomorrow, but certainly by next week, where I will take a section of the time, and I'll break it down into chunks, because those are the easiest, and we'll take a look at long-term. That means we'll most specifically take a look at the longer-term charts, the monthly. We'll take a look at intermediate term, which will be the weekly, and then we'll take a look at short-term, which is daily, and then obviously some intraday stuff. But I'll go ahead and make those changes out there, which will be really great. So I appreciate, Mark, and that goes for you folks as well, too. If you've got questions, if you've got a question, I promise you somebody else has that same question. And so I know the apprehension of being able to call into a show like this, any type of radio talk show, but there's nothing better than overcoming any kind of hurdle that you've got out there. That's when you overcome a hurdle, it helps you get to the next level. Well, that's really what consolidations are all about. Consolidations are nothing more than hurdles. It's where price is traveling in between a range. I've got Walmart up on my screen here. So if you're watching on Tiger TV or listening on the radio, what have you, just go watch the archive of the show, and punch in the later segment of this. And what I've done is, you don't have to really understand much. You don't have to be a MIT mathematician. All you have to do is just identify logical areas where price has been traveling within. On the longer term chart, in the case of Walmart, we're taking a look at this yellow box. It's been traveling between the time frame of December 31st, 1999, when it made a high at $70.25, and right around the lows out here, you could say the lows right around the area of about $41.50. Now, you don't have to be exact. This is not about being exact. You want to be maybe exact when you're clearing a swing point, and the swing point is nothing more than the actual high during the the trading session that you're looking at. In the case of Walmart, that was $70.25. So this had been traveling in a sideways consolidation area. Let me try to grab one corner of this and move it. As I move this yellow box here across the side here, been consolidating here for quite a period of time. You're talking about 13 years or so before it actually finally broke that consolidation. When it breaks that consolidation, which Walmart did here, it did it the month of July 31st, 2012, and all that really happened was it came back and it tested the blue lines that are going across my screen. Those just identify primary trading ranges, brought to us by Bud Rolfs out there. But in the case of Walmart, those are the primary trading ranges. Don't pay attention to that right now. All that Walmart did when it broke out is it came back, it tested the consolidation range, much like I want to see happen on the S&P 500 in the monthly chart, to be able to give us that confirmation that, in fact, it is broken out of a consolidation range. Walmart has proven that because it came back, it tested it, it's bunched back out, and where Walmart will run to, it's going to add maybe another, 40? We're going to go from 42 to 70. We're going to say 40 to 70. It's got a $30 trading, it's got a $30 consolidation. Walmart will eventually be trading at $100. It's trading at $77.72 right now. That's what happens in consolidations. That's why when I take a look at the bonds right now, and it works on every chart, every time frame, in the case of bonds, it consolidated sideways from January and didn't break out until April 3rd last week. That's why I say the price projection is 149. So I hope all that helps out there, folks. Hey, stay tuned. Basil Chapman, I believe he is up next. It is Terrific Thursday. Have a great day. I look forward to seeing you tomorrow morning. Take care, folks.